We've got this update on China, and this is what could move markets.
Yeah, and we already have seen a little bit forbid for risk assets after some tweets from Hu Xijin of the Global Times talking about mitigating impacts of the trade war on China. But Manus, the lines you're referring to that we've gotten in the past hour, China basically releasing U.S. tariff exemptions, a list effective September 17th. The crucial line is that it doesn't list corn, soybeans and pork in that first tariff exclusion, but it does approve a tariff exemption for U.S. lubricant-based oil. The question we've got to ask ourselves is whether this really is any easing of tensions, because, look, we've been here before where we think tensions are easing and then they just get worse. But in the meantime, let's check in on the markets in Asia. Juliette Saly in Singapore has more for us. Juliette, are we seeing much reaction to these latest lines on the tariff exemptions?
Well, Nejra, I'm looking at the safe havens, and to be honest, no. And I was just talking to Mark Cranfield from our MLive team, and he was saying markets are a little bit puzzled by this because essentially it comes on the back, as you mentioned, from that tweet that we had earlier from an authority. And market participants are essentially more puzzled in terms of what has been excluded from this list. And as you, of course, you have mentioned, it is some of those key farm produce, essentially saying, is there limits to how accommodating China is going to be in these negotiations? So when you look at some of the safe havens, you're actually seeing the dollar more bid against the Japanese yen, and really the gold price is actually falling. In terms of Asian market moves, we are still holding on to those gains that we had seen earlier before this news was broken through. So let's switch it out and have a look at how Asian markets are tracking. The Nikkei is closing higher for a seventh session in a row as we see that continued yen weakness, up by 1%. South Korea's market, there's been a lot happening here. We've had quadruple witching. We've had unemployment at a 6-year low. The Apple stocks all looking good. And Hong Kong's market is more being driven by domestic issues today, so a rebound in a lot of those banking and property players. When it comes to China's market itself, the CSI 300 is still actually holding on to the losses that we saw earlier in the session, so down by about 0.6%. At this stage, it doesn't look like there has been too much market reaction in Asia, Manus, and that is mainly, as I said, because people are still scrambling to see what is in this list and, more importantly, what has been excluded.